What happens when borrowers don't make their loan payments? At LIONSCOVE, we underwrite all our loans with the intention that our borrowers can make their monthly payment. We have no intention to take over properties. We don't lend for keys, for houses. We want our borrowers to be successful. That's first and foremost. When our borrowers win, we win. So we work very hard to make sure that our borrowers are set up to be successful in our underwriting, etc., so they can have a successful exit. We also employ a lot of strategies to help mitigate any sort of default or hardship that comes along the way. First and foremost, for our investors, we make sure all our borrowers are put on ACH payments. That means every single month, their payment is automatically coming out of the bank account, which we have validated has substantial funds to be able to service the debt with us. If for some reason they are not able to make the payment and it comes back with an NSF or not sufficient funds, then we're on the phone with the borrower to rectify the issue and get them placed back on ACH. That's the ideal solution. If for some reason they missed a payment, either they've done the NSF on the ACH that I just talked about, or they've called up the servicer to pull themselves off of ACH. Either way, there's an issue which we need to talk with the borrower, and we're on the phone and we're communicating with them immediately. If for some reason it's gone several weeks and we're not reaching resolution, we increase the touch points that we have with the borrower through our servicer through a high touch program where the borrower is getting called and emailed at least 3 times per week on each communication platform to make sure that we are reaching out and trying to have resolution. That's in addition to our team directly reaching out as well, which is critical in what we have found to being able to get to resolution fast. If they continue to not be responsive and we can't reach them, at that point, we'll put their loan in default. Default effectively means that their interest rate is increased, oftentimes up to a percentage like 30%, which is designed to be a big stick to get them to comply to make the payments. We don't want to be vindictive. We don't want to be harsh with our borrowers, but we want to make sure that they're honoring the commitment that we set out originally. If for some reason there's an issue going on, we're happy to find alternatives or restructure how the loan comes to play so that the borrower can be successful, right? Again, at the end of the day, we want the borrower to be successful. What we don't want is for a borrower to be non-responsive. In those situations, we have a lot of big sticks, such as the default interest rate, to bring them to the table so we can find a resolution quickly. If for some reason that doesn't solve the issue, and now we've missed 2 payments, and we were essentially 90 days since the last payment that we've received, well, at that point, we begin the process to move to foreclosure. If they've been unresponsive, we need to make sure that we're moving quickly to protect our investment for our investors to make sure that we're not losing principal. That being said, once we start the foreclosure process, oftentimes communication channels are again opened up because the borrowers know we're serious about how we're going to proceed and move forward in protecting our investment. The likely outcome in a foreclosure is that the borrower sells their property. If you've watched some of our other videos, you know we're conservative in our underwriting and there's almost always equity at stake that if the borrower can sell below market, preserve not having to go to foreclosure or having any foreclosure action on their credit, still earn a bit of money and get out of the situation gracefully. That's ideal. We encourage our borrowers to do that. We have a network and a stable of real estate brokers in the states and cities that we lend to be able to put in contact with these folks, again, so they can have a successful and graceful exit. Ultimately, that's our goal. If for some reason that's not feasible and the borrower thinks that they're able to exit out of the loan on their own terms and refinance or sell at a higher place or at a higher price, then we'll continue with the foreclosure process, ultimately leading to a sheriff sale or an auction sale or a trustee sale for us to recoup our investment. And oftentimes, because we are conservative and we've got the equity in the property, we're usually walking out of that unscathed from a principal standpoint and having some upside for the investors.